Hello everyone, this is Ryan Mallory for SharePlanner.com doing another Google Hangout with you guys, and I'll be posting this also on YouTube after I am finished, so that if you weren't able to see it all or weren't able to see any of it at all, you can always go to YouTube and see it in its entirety. So with that said, let's go ahead and jump right into the charts here. We have the S&P 500 today, actually doing a lot better than where we started the day. You can see the dip buyers are still very much in control. And the biggest thing that I noticed about the sell-off is, well, we haven't had a lot lately to begin with, and as a result, the pivot points calculate the pivots or the support levels based on the previous day's price action. So when the price action gets really tight, the support levels down below aren't going to be as wide or as much space between each other. So what we had today is about a 6-7 point sell-off at one point. Actually, we got down as much as 9 points, and then we bounced right off of that S3 level, and we've been rallying since then. And I went ahead and closed out the Amazon trade. We scrapped out a small, if you even want to call it that, a profit. I basically would call it a flat trade, because we got in at 338.93 and got out at 339.40, so little to no profits there. But what I didn't like about Amazon was the fact that it got right up to this 200-day moving average like this here, and when it got up there, it basically just sold off. It couldn't hold it. So I gave it till today. Let's see if it could do something today, and it couldn't do that. Now, it has improved some from where we got out, and it could eventually bust through this 200-day moving average. If it does, I tip my hat to them. And but overall, though, the bearish action in it was just a little bit more than what I wanted to put up with on the stock. We gave up about a couple percentage points in gains there. It couldn't get through the 200-day moving average. The market was falling some, so I went ahead and just closed out that trade. But in the process of doing that, I did get into 2 new trades today, and let me go back. So let me go back to the S&P 500. So we sold out of one, but we also used the weakness today to get into 2 more trades. So we're actually when I say we, me, and members of the SharePlanner Splash Zone, we're actually heavier long as a result of the sell-off this morning than what we were when we came into it. For the last, basically for this entire week, we've been selling off positions from Facebook to Netflix to ESRX and some others, where we were booking the gains. So like 4% here, 5% there, and just making sure that if there was a sell-off or if the market started turning down lower, that we didn't have a lot of exposure to the downside. And also the benefit of doing that gives you the ability to get long on the market when that sell-off comes at cheaper prices. So the S&P today doesn't really look like it wants to sell off that much. It's holding on to the 5-day moving average, which earlier in the day it had broken below. And really that 5-day moving average has been a great trajectory of where this market's going here in the short term. And you can see it's just holding right to it. For the first time, since the sell-off back on the 15th of August, it's broken below the 5-day moving average, but has since regained it. So I thought, if we can get back above 1995, it would probably be a good area to get long on some stocks. So the first one was MBL, and I mean, really, we're not doing anything yet in this one. We're long at 70.90. And it's sitting at 70.81, so slightly in the red. But what I'm looking at on this trade is, and it might not come as obvious to a lot of you right at first, but this yellow line right here is a support level. And what you had here is Noble Energy breaking right above that support level back on Monday. Tuesday, it goes up even higher, and it looks really good, but then it starts to retract some on Wednesday and Thursday. And that's not surprising, because the last couple days, counting today, on S&P haven't been really all that great for the market. So no surprise there. But what it does do is it pulls back the support level here to what makes for an opportunity to see the stock bounce back off of the support level and probably do it with much more vigor than we saw the first time, and maybe get up to this like 73, 74, and if that rally can keep on going, maybe somewhere between the $75 to $77 price range on NBL. So I really like it. I like how it pulled back to that base today, and I want to be able to ride it higher in the days that are forthcoming. The other one was TJX. And this was one that somebody in the splash zone actually spotted out, so I can't take credit for myself, but I like the trade enough to want to get long on it. And in that trade, we are long from 59.65, so we're got to get a start going here. It's at 59.90, 59.89, and if you don't look at this, if you don't look at the price action from today, let's see if I can short. There you go. You can see it's been coiling perfectly. Okay. Yeah, it's got a huge gap underneath it that one day get filled, but right now we're not looking for that to get filled right away. But what we are looking for is for a breakout of this base. So today, and I always thought too, all right, put the stop loss probably below this day here, which would be let's see, like 58. Yeah, basically like 58.60 is where we put the stop loss at, and wait for it to break out. Now, it started to break out yesterday. I said, you know what, the market's acting a little flaky, so let's not get long on it today. Well, today, when the market sold off, it definitely got close to that stop loss. I think it got as low as 58.75. Let's see, 58.77. So it got really close to that stop loss, but it just reinforced for me that is a good stop loss because that support level held. And since then, it's been rallying, and it pushed, and it, just like the S&P, went all the way down to the S3 pivot level before bouncing just about perfectly off of it. And now it is definitely in the breakout mode. So the key for today, even if we don't gain another penny on this stock just today, what I would like for it to see it do is hold the support level above, like 59.73 or so. And if it does that, we got a good start to this trade here. NBL we might have to be a little bit more patient for because it has seen a couple of days of selling, but once the buyers start jumping back in it again, that one should be pretty good as well. So we've talked about the two new trades today, why we got out of Amazon. You have the S&P 500 here, definitely still showing some signs of dip buying, where basically the bulls just don't want to give up on this rally yet. And here's the thing about these rallies, you really don't know how long they can go on for. I mean, they can go on for far more time than what you would ever imagine. And the old saying is the market can stay irrational far longer than you can stay solvent. So I don't go short in this market, especially in this Fed environment since 2009, where the Fed is constantly figuring out ways to boost stocks. I received an email the other day asking about my short strategies, because a lot of people haven't really experienced my short trading in a long time, and I would say my last really strong shorting campaign came back in like September of 2011. I mean, there's been some time since then, but where there was like a long duration of like multiple months of just shorting stocks, and that was summer of 2011 when you had that whole financial crisis brewing over in Europe, and it was great. And then before that, it was 2008 through early 2009, where you could just short stocks to oblivion practically. But we really haven't, outside of those two time frames, there really hasn't been much to short in a long time. So the key has been managing the long positions, managing the risk, and when you do get those momentary sell-offs, like what we had, in late July and early August, or back in January, that you stay solvent, that you stay profitable, that you're not giving up all your gains to start things off. So that's really the key to these markets here, and eventually we will get to a point where it is a great market to short again, but right now is not the time. I mean, I would not be surprised if once the Fed starts raising rates, hopefully in sometime 2015, where the shorting opportunities will definitely present themselves, and then that's where you can just really profit to the downside. And just from a personal standpoint, I really like shorting the market. I feel like that as a trader, I'm probably better even at shorting stocks than I am at going long. I just do really good in those environments. But I'd be foolish I shouldn't say better. I really look at the charts the same, the same way. My approach and everything. I'm more aggressive to taking profits on the short side, whereas on the long side, I'll let stocks ride out a little bit longer. But I enjoy shorting stocks more. Probably is the better way to frame it. But overall, I mean, until the market really wants to be less dependent on the Fed and its activities, and we're probably going to continue to see a rising bull market, and it is in a bubble. I mean, I don't think it's like the dot-com bubble where you had ridiculous evaluations. I think there's some pretty good evaluations that are going on, but I think a lot of those evaluations that are really strong are on the heels of the fact that there's so much government intervention going on in our country right now. So when you have so much government intervention, I mean, just think about like Walmart, for instance. If the government wasn't, paying as much out in entitlements as it is right now, from disability to jobless claims to various welfare and food stamps and stuff like that. I mean, we got record number of people on these things. If it wasn't doing it, how would Walmart really be faring right now? Probably not so great, because I would reckon to say that Walmart gets a huge chunk of its profits from government entitlement programs. So, that, I mean, that's just the nature of the beast right now. So let's look at, without getting too philosophical and stuff like that, because I try not to do that. I try to stick to the charts. Let's look at the Russell. You can see the Russell just hasn't been as uber bullish as the rest of the market has been this year. Some people say, there's a double top there. That may be so. Honestly, what I would watch for is the box that it is trading in. And when I say box, I mean the box that we've been stuck in for pretty much all of 2014. This is a box. Until it can break out to the upside here of like 1213 or basically all-time highs, or if it can break below like 1086, there's really not a play in the Russell from a straight ETF standpoint. It's just going back and forth. That's all it's doing. And it may go back down to 1086 and bounce, or go up to 1210 or 1213 and sell off. But until it can get some kind of motivation to break those parameters, it's really not worth trading right now. And let's look at the NASDAQ. Unlike, it's sort of surprising, because I would have thought that the NASDAQ doing as well as it's been doing, that the Russell would have followed it higher, but it hasn't done that at all. I mean, the NASDAQ has just been a beast into itself. And looking back, going back to the 2000 bubble, I remember, gosh, it just seems like not too long ago. Think about like 2009, where we were down like at 1248 on the NASDAQ, and the all-time highs are at 5132. So I remember, just like a couple of years ago, 2012 or something like that, we're at 2500, saying to myself, we might not ever see the NASDAQ highs again in my lifetime. Well, fast forward a few years, and we're at 4561, and what did I say the all-time highs in the NASDAQ was? 5132. We're less than 600 points off of the all-time highs. I mean, we're really not that far away, and maybe we even hit that this year. I mean, I wouldn't even be surprised. But that to me is like absurd, because like 2000, you had stocks that were so crazy in the green. I mean, stocks that had gone from like pennies to like $100 a share, and we don't see that same bullishness. But geez, I mean, the NASDAQ's at those levels again almost, which is just amazing, really. We talked about the indices. We talked about some new positions that I've added so far on the day. A couple of stocks that have been brought up. Let's look at Tesla. Not from that perspective, but from this perspective. I really like Tesla today. I've been looking at it today, and I still may get long on it by the end of the day here. I think if you're going to get long on it, you can do so by getting long at current price and probably putting a stop below the 825 lows. It's not an ideal stop loss, but if you put it at like 257.98 or something like that, it should be pretty good. I mean, ideally, I would like to take it all the way down there, but that's more of a stop loss than I want to employ. So I like to keep it tight. This is definitely a good setup, and one that might be worth getting long on before the end of the day. Really, really good setup. Amazon, we talked about. Apple, Sorry, I keep going over the list of stocks in my head here. I actually got it all written down, but I need to cross them out as I talk about them, I guess. Apple, we've been in long since August 1st. So what does that put us at? Back on, yeah, Friday, August 1st, day after the big sell-off, we actually floated lower for about 4 days, and it was getting a little bit frustrating, but then we bounced perfectly off of that 50-day moving average. And to date, we're up about almost 8% on the stock, about 7.7%. So I'm going to just keep writing it up. I mean, when we have the rollout of the new products in early September, that might be a time to start, booking the gains. I don't know if I really want to hold through that, even though it might turn out good for the stock. I just don't know what they're going to say, nor does anybody know what they're going to say. And those are like, when you're up 8% on the stock, I'd say, you know what, let's just go ahead and book the gains and enjoy the trade. Let's not put that at jeopardy. Because I will say this about Apple, since Steve Jobs died, it just doesn't seem like that there's like the wow factor in their products anymore. It just seems like, hey, we're going to come out with an iPad that's in gold. Hey, we got the polka dot iPad or the iPhone or whatever. I mean, if Steve Jobs was alive, I think we would see a lot more excitement coming out of the stock, new products. Maybe I'm just talking foolishly here, and maybe they're following the guidelines that he set out for the company before he died. I don't know, but it just seems like that they've lost some of that pizzazz that the stock once had. But nonetheless, I mean, it's still rocketing to new highs, and who am I to criticize it, right? TQNT. So now what I want to do is just go over some of the stocks that I'm stocking here today. I already talked about Tesla. TQNT, looking back, I mean, if I could look back, about a couple hours back and say, man, I had the choice between TQNT and MBL, what would have been the better one looking back? It would have been TQNT. It's up about 1% since we got long, whereas MBL is still trading flat on the day. But nonetheless, I mean, this is a solid trade setup. You can see it's bouncing off of support perfectly here. It's a semiconductor, so you do have a little bit more volatility that's associated with this kind of a trade. If you're to get into it, you're going to have to use more of a stop loss at this level than what I would care for. Probably something below. It's probably going to be like 1854 at the max. Okay, if you really want to play it tight, then just go below the day's lows, I guess. Or you could go below Tuesday's lows, say like 1865. But at that point, you might as well just go down to, 1854 or 1855 or so. MBL, TJX, we got some trade setups. Oh, let's look at CTXS because this is a position in our portfolio. This one's been sort of irritating me a little bit because it has all the ingredients for a great trade, but it just isn't showing it yet. Kind of like the Facebook trade from earlier this week. We got out before the sell-off, the last couple of days, but the stock itself just wasn't performing right, and it just wasn't, we had spent enough time in it, I think, since like August 1st in the stock, and it just wasn't doing anything. Now CTX is kind of doing the same thing here, but it's still remaining bullish. I mean, you can see it's holding that support level perfectly, and at any moment it could explode higher into the 70s, and once it does that, it should make for a really good trade. So I'm going to hold on to it still and keep looking for what, if it breaks below that support level, I'm probably out. I just, at that point, I feel like my trade's busted. I thought it was going to be busted earlier this morning, but it made a nice comeback for us. And then you got WDC. This one's a box breakout play. We saw it break out yesterday, but it's given up those gains. So, one of the keys here might be to readjust the box here so we have a clearer parameters. So I would say if this thing gets, above 102.82 or so, that would be where you'd want to get long. And I've traded this WDC stock a couple of times this year, and if memory serves me correctly, it has been profitable for us. So, 102.80, that would be the ideal point to get in. Anything below that, I think you're risking getting stuck in this range-bound consolidation pattern here. SPWR solar has this downtrend off of the July highs. It's broken it, but it's consolidated just above it. So the case here is if it can get above, yesterday's closing price. Let's say 38.10. If it can get like 38.10, this thing should have some mojo to it to possibly start pushing up towards the 40s. SCHW, I was looking at this one today. We were in ETFC earlier this week, but it broke below this support level here, so I'm not really crazy about it at this point. You could say, well, maybe the trend line should be drawn off of just the closing highs, and you could have a point there. Sometimes I'll do that. Technical analysis isn't a perfect science. What you're looking for is patterns of support and tendencies in a stock. So like SCHW, even still, it's slightly below it. It would have to probably finish green for it to really make a compelling case for getting long in it again. ESV is not too bad. You got a bull flag here, but once again, it really hasn't got that mojo yet to it to where it wants to break above like 50.16. If it does that, then you've got some excitement in this play here and something that's probably worth getting long. Until then, it's just stuck in a bull flag. And bull flags are good patterns, but they can be really frustrating when you're stuck in one, and because you're just waiting for it. You know that the pattern's positive and everything else, but you're having to play, play time there, and the quicker you can get out of the trade, always the better. So when you're stuck in that consolidation pattern, it can be sometimes frustrating because you're just wanting to see it break out. You don't want to, hold on to it long enough to where some kind of downgrade comes out and knocks it down 5% on you. So ESV, wait for the breakout, and once that breakout comes, you get long like around 50.16, and you should have a good trade on your hands. VLO, another consolidation pattern, but once it breaks above, say, 54, like 28, 29, that as well will be a good long setup. So these are some of the stocks that I'm looking at right now. RRD, it broke out, but it struggled. It actually broke above the 200-day moving average and closed above it, which is great. But then on today, it's struggling with it again. So not sure I understand the full story here with RRD and why it's behaving the way it is today. Because if anything, I would have liked to have seen it bounce hard off of these lows here and get back towards the 200-day moving average and above it. So we're not seeing that today. I would probably wait for for the stock to get back above today's opening price. So if it gets above, say, 1750, I think it would do well. Quick question just came in, was my thoughts on AMAT. This is my first time looking at it here. So you can get a good idea for how I mark up charts in real time. Once again, what I'm trying to do is find tendencies on this chart, to give me clues about where the support, where the resistance is, and what its tendency might be going forward. So you can see there is some resistance there. I don't know if that really is. So I know I might sound confusing here, but what I'm doing here is going over in my head what the likelihood is of this being support, this being resistance. I'd say that is probably your true resistance. So technically, it's already broken above AMAT. Let me make that a little bit more precise. There we go. It broke above it yesterday, so it's already in the full breakout mode. You do have some price level resistance right here at 22.82 because of all this right here, so it may struggle trying to get through that. I don't like that kind of price resistance being right there right out of the gate. So that would be a hindrance to me to want to get long on the stock right now, because there's a good chance that it could end up being a head fake. But I mean, it did break out, from this price resistance level here at 22.38. There's just still a lot of resistance overhead at different areas on the stock. So I maybe hold off on that one. Wait for some clearer skies. But I definitely see where the opportunity lies. But I'm just worried that opportunity might be limited going forward. So that's going to do it for today. If you guys have any questions, I'd be happy to take them. You can always just got one here. Can I talk about Facebook? And I sure can talk about Facebook. So we got out of this one, I think, before this little pop-up. This sort of got under my skin a little bit on Tuesday, and I usually try not to watch it, stocks after I get out of them, but something like Facebook, because it's so heavily traded and popular, it's almost impossible not to see a big pop like that. but this is what I was talking about. We made about like 3.5, 3.6% off of this trade, if I remember correctly, and you know, it was profitable and everything, but we just got stuck in this malaise of like consolidation for like 4 or 5 days straight. It just didn't go anywhere. And then we got this move on Friday of last week, and that looked pretty good. But then again on Monday, just absolutely nothing. So got out of it. You know, it just was, the time factor was just becoming too much. We had held it since 8/1. We were like 3 weeks into it, and we only had about 3% to show for the trade. So at that point, I had enough of it. And then the next day, obviously, it sells off. But today, I mean, it looks bearish in my opinion. I would not want to be long on this stock anymore. And you know, and this is the frustration with Facebook of late. You got Facebook, and then you look at, you know, stinking Twitter, TWTR, and you got this. This is what I thought Facebook would eventually be doing, and it's not doing that. You know, Twitter's up 3% today, and Facebook, it's down again 1%. So at this point, the stock just has no catalyst for upside movement. That doesn't mean that it can't get it going forward, but right now, from what we know, from what we see on the chart, there's no impetus there for it to move higher. So you know, I would, if you're in it, I'd sell out of it, just, you know, because you don't want to hold it any longer and see the stock go against you, and if you have gains in it, you don't want it to erode those gains. So I don't see really any strength out of the stock at this point. I would wait for it to show you some before reconsidering whether to get long on it. If you're looking for a play, I think that one of the best trade setups out there right now is Tesla. I think it looks really good, and probably if I'm to add another trade today, it's going to be in Tesla. So that's going to be it for today. If you guys have any questions, feel free to email me, ryan@sharepointer.com. I'm always available. And always try to get to everybody's emails. If I miss your email, just email me again and say, "Hey, answer my freaking question, man." And I'll do that. I really do want to be as engaged with the people in the splash zone and people outside of it too. If you have questions, feel free to email. The best way to access me is in the splash zone, because I'm in there from every day, always, at least from like 9:20 in the morning until 4 o'clock when the market closes out Eastern time. And usually I always see it. So like if it's like the middle of the night, there's a good chance I might be still sitting in front of my computer with the chat room up, and you can ask me a question if you have it, and I'd be glad to help you with it. So once again, Ryan@sharepointer.com. If you have any questions, or if you're a member of the SharePointer Splash Zone, just hit me up in the chat room, and I'd be glad to help. That's what I'm there for. That's what you guys pay the dues for. So so ask away, chat away, and y'all have a great weekend. We've got a 3-day weekend coming up, so enjoy that with family and friends, and an extra day off from the market, and God bless.